Then on account of on account of leaving an impact on the environment for these organizations, there is an effect on the reputation. So the reputation gets affected. So on account of reputation loss, there would be a decrease in sales also. So if they lose sales, that is a loss for them. That is another type of cost which they have to account for. And usually because their organization is into those activities which have an impact on the environment, they, to compensate that part of it, they get involved in some other activities, maybe by providing information to others and stakeholder, general public. They bring in awareness to all the stakeholders, stating what are the methods which they are following to see that the impact is little less on the environment. Okay, so those things are other activities which they have taken up. So on account of the whatever are the costs, also has to be accounted. So now here it becomes important for them to see that how do they account for these costs. So they have to account for that and then show them in the income statement, have a report prepared by them as to what measures are they taking, what are the costs which they are incurring. Okay, now here it says that internal costs directly impact on the income statement of a company, but the external costs are imposed on society at large but not borne by the company that generates the cost in the first instance. So there are certain other costs which are also imposed, like government may come up with um, certain things which they have to follow, like maybe they have to take up extra measures to see that the pollution impact is less, or how do they dispose of the wastage and all the other things. But those things also have to be taken care of, that those are external costs. Fine. On account of environmental accounting, the systems are improved. The improved systems, okay, they see that while right at the time of designing their products or designing the machinery, designing the equipment, designing the process in which the activity is taken up, now they take measures to see that there's less impact on the environment. So improved systems, the wastage disposal cost. So whatever is the wastage, that cannot be just dumped anywhere, but they have to take measures to decompose the wastage and settle that wastage. So waste disposal costs. Then product take back costs. Okay. Um, while producing the product, what are the things which they, what measures are they taking for the production of the product? Regulatory costs are those measures which are imposed by the government regarding the process which they have to follow. So they are related to regulatory costs, upfront costs, back end costs. So even before the production starts, what measures are they taking? After the life of the product, life of the machinery, what measures are they taking is back end costs. Then carbon emission, when there is carbon emission, there's something called as footprint, carbon footprint. So what is that account of those things have to be taken care of it. Usage of energy and water, that's the conventional cost, what you energy and water which they consume. Forest degradation, healthcare costs, and social welfare costs. So all these are the costs which are incurred on account of taking up a process wherein there is an impact on the environment. Now, in case of environmental accounting, usually they are connected or associated with three different types of accounting techniques. So along with whenever they follow environmental management accounting, they also take the help of three different accounting techniques. The first one is ABC, activity based costing. Now we understand activity based costing is in case where the overhead costs are to be allocated. So in case of allocating the overhead costs incurred in case of organization involved in environmental accounting, So there the overheads are allocated based on the principles of the activity based costing. Fine. Cost drivers are identified, and then product costs are um, appropriately calculated. That is, overheads are appropriately charged. Therefore, the right amount of cost is ascertained. Then we have another accounting system called as life cycle costing. Life cycle costing talks about consider the entire life cycle of the um, consider the entire life cycle. Just a minute. Okay. Um, for a month. Okay.